Hi guys and welcome back to Jashi. Today with something that I have been doing for a long time but I stopped doing for an entire month, which is my Fundrise updates. As you may know, I've been starting to invest in Fundrise since 2018. There were periods where I did the bi-weekly updates. I then stopped for 5 months. As some of you know, I've been working on a flip property that literally took away all of the time I had, and I did one update pretty much a month ago. And here we are, back at it again. So last time we were around 45k. Of course, after 1 month and a little bit more, we're now at 46k. What has been happening? This is interesting because compared to the rest of the market, this is real estate focused, and this is a different kind of real estate. As I've been telling you in the past couple of weeks where I've been doing real estate updates, I've been telling you that the market has been pretty resilient unless you're looking at California stuff where these guys are also invested. So overall, how is our performance going right now? Let me close this and let's get started. So account-wise, as I told you, we're at 46,252. Now, return-wise, for this year, 2022 year-to-date, we are at a total of $2,331, which means we are net positive. And in terms of percentages, we are around 5% return, which compared to stocks or public REITs, so real investment trusts that you can buy on the stock market, is killing it. This is bloody amazing, guys. I mean, the rest of the world is in negative territory. These guys are still positive. Why? Because they're not sold on the stock market. This is private, so the value of the money you see here is related directly to the value of the homes and the rental income that it is producing. This is why Fundrise, unlike a public REIT, has a positive return. Because even public REITs, in terms of what they own, most of the cases, the returns should be positive. People are still paying rent, and real estate is still expensive unless you own real estate only in California in the most expensive areas. With that said, let's look at the portfolio. There's something they just released that I really love on their computer app, which is you can now divide and look at the different portfolios that you own. As you may know, when I first started the account, I chose to do the balanced investing. When you start the account, you can decide if you want to focus on rental income, so general income, growth income, so growth of the real estate, focusing on improving real estate, improving the value, and then selling, kind of like I do with flipping, or a balanced investing, which is what I do also in my real estate investing, where I actively buy and sell homes. Some of them I keep as rentals, some of them I flip for a profit. And now they finally divided it. So if I go, for example, growth real estate, I have the different little portfolios like single family, multifamily, industrial, because they also do commercial, creative office, and others. And if I scroll down, I can see the different various properties I own. Now, if I go in portfolio in general right here, let me refresh it again. We have 268 properties, which means that compared to my last update, we didn't really get any more properties. Fundrise, I believe, is getting more in a saving stage. They're buying little properties. I'm also receiving less updates on properties that are being bought right now because I feel like they're trying to understand what is happening in the market, collecting some money, and getting ready to possibly buy stuff for the cheap. Now, a really cool thing I love about Fundrise is that on top of sending updates, when stuff is getting a little tricky, they do a very good effort in giving updates to the investors. And this is a really good update they recently posted. This is a podcast with a quick little, let's say, article, which says that Ben Miller, the Fundrise CEO, what he thinks about the market. Ben Miller in the past year, so 2021, was very skeptical about what was happening with the market. He was expecting inflation to start rising up, Federal Reserve to start increasing interest rates, and 2022, boom, that's exactly what happened. In 2021, he was very insecure about the market, so he started becoming a little bit more cautious, based on the concept of be scared when people are greedy and be greedy when people are scared. Funny thing, if you listen to his podcast, which if you have Fundrise or if you want to open an account, which you can do with the link down below, with some nice perks if you do it with the link down below, in this podcast he actually mentions that now he feels much more comfortable about the market, on top of pretty much having everything happen that he expected in the past year. Now he's finally seeing that people are a little bit more scared, which is a good time for him to start looking for good deals. And this is pretty much also my general opinion. I'm soon about to release an update on the real estate market where I actually will say why I believe it's a good time to buy and why I just placed an offer on 2 new homes, one to keep as a rental and the other one to flip for a profit. And the fact that this guy pretty much confirmed my own opinion makes me love it even more. Now, the cool thing of Ben Miller and Fundrise in general, if you look at the way they're investing into stuff, they're very, first of all, diversified. Number two, they're not over leveraged. One thing that you see be posted a lot lately, people like Grant Cardone or many other real estate investors, there is a lot of leverage. People getting enormous loans with 3% down, 10% down, little equity, which can be risky. I'm not saying it can be like 2008 because the lending standards are much better than 2008, but there's a lot of leverage. If something goes wrong, the whole house of cards can crumble. Fundrise, on the other hand, seems to be focusing a lot on more equity investments, so putting more cash up front or coming down with some deals where they can protect themselves with some maximum loss potential, which I really love about them. In terms of return, guys, so first thing, this is the only, let's say, account that is completely passive that I own that isn't positive. Why? Because it's not related to the stock market, it's related on the underlying assets that it owns and buys. Number two, it is completely passive. So I made much more returns in terms of real estate. I just flipped a house for a 50% return in 5 months, which is incredible given all the negativity that is out there. But compared to my real estate investment that I did myself, I'm not moving a finger. So if I'm putting money into this and I know that even in a bad time, their way of investing is pretty good and well diversified, I'm happy to put more. Like, I love these guys. I love these guys. If everything goes well, I'm probably gonna do anything to apply to them and start working with them because I really like their mentality. I love how connected they are to investors and how many releases they do in terms of information, how open they are about what you own. Unlike some other questionable CEOs we just saw, like for example FTX that I've been mentioning in my past crypto updates for the past pretty much 2 weeks. But yeah, guys, generally speaking, I'm happy with them. I will keep on going. 53K away from becoming a premium account, so it will take a while. If I do a couple of other flips, I might throw in a little bit more money in order for me to also show you what it means to be a premium level account. Seems like you have a couple of perks that are pretty cool. We're gonna see that. Guys, that's all for now. My general outlook on this company is awesome. I love everything about them, and not financial advice, but I generally tell you, take a look at what they do. If you're interested in joining them, please feel free to use the link down below for us to all get some cool perks out of it. And that's all, guys. Thank you for watching. Ciao.